let's go to Guillaume. Guillaume Joly, as I said, who's a Sustainable Housing Officer at BEUC, so the European Consumer Organization, so brings to this discussion a consumer perspective. Guillaume spent many years working in local authorities in France, so is also specializing in an inclusive energy transition within the residential sector, also worked at C40 before joining BEUC. So there's been a couple of questions that have come in which pertain, I imagine, directly to what you're going to say. One asking whether there was any research done with homeowners in terms of how appealing this actually looks to them. I guess that's something Peter can pick up on later. But it would be good to hear from you. It sounds, I'm not going to say it sounds too good to be true, but it sounds pretty good for consumers. What's your take on it?
Yes, thanks for having me, and hello everyone. Indeed, it sounds interesting because as a consumer organization, BEUC, we are supportive of more affordable and more accessible financial instruments and offers for the energy retrofit of homes. So the EU ERL sounds like it might be a good instrument. And today we still see some issues with financing. To illustrate, and you were mentioning the potential research, what we observed with our members, so consumer organization across Europe, is that in most countries where green mortgages are provided, they are more expensive than regular mortgages. So there are a gap to be filled here regarding existing instruments. I wanted to also say that BEUC supports the evolution of the European Central Bank monetary policy towards green TLTROs. We think it's important to keep interest rates lower than average for the economic sectors we want to foster, because it's also a good way to make it cheaper for consumers to renovate their homes. Also, the point on leaning on the value of the housing stock itself as a leverage to engage more households also has a good potential if channeled properly. But to say here that current equity loans are not up to the task yet, because they don't necessarily address accessibility to the loan for the elderly as a priority, as we can see in France with the existing equity loan launched a few months ago. That's why we need to ensure that the financial tools fill these gaps to meet consumers' needs. This is where the EU Renovation Loan can play a role, we do agree on this, by helping to pave the way to private financing via banks. However, it cannot be a standalone and needs to be combined with other enabling tools to ensure it is inclusive of low-income and elderly households. A European framework for guarantee funds is needed to address the complicated situation that will emerge. Property exposed to natural disasters as flooding, for example, who would have to pay and what? Or inheritances grinded to a halt due to diverging thinking of heirs about selling the property. Should we sell? Should we not? At which conditions? Consumers need to see the possible liabilities are anticipated to avoid leaving them stranded in impossible situations. Also, consumers need clarity regarding the resulting compiled cost of the loans. How much will it cost me in the end? How much will it cost me to repay ahead part of the interest, for example? Are the insurance costs factored in? How is the green value of a property expected to evolve compared to local conditions? A capital city and deprived rural areas don't have the same potential, for example, regarding the green value. And there is here a certain gray zone on the exact scope of cost covered with the EU Renovation Loan. In any case, for the benefit of consumers, creditworthiness assessments are vital to ensure that loans meet consumers' needs and capacities. These assessments shall factor in subsidies in the case of low-income households. And in conclusion, for the EU Renovation Loan to be the tool that fills the gaps, a few more consumer protection need to be guaranteed for it to work. But we are welcoming it as a good potential.
Okay, thank you for that.